We have the second highest unemployment in the G7. This is all the result of out-of-control government spending and taxes. In reality, he has increased the deficit by almost 70% above what Justin Trudeau left behind. And now the parliamentary budget officer describes this Prime Minister's deficits as alarming, stupefying, unstable, unsustainable. If you don't change, this is done, and something is going to break.
Mark Carney was supposed to be the safe pair of hands. A former central banker, a polished financer, the man sold to Canadians as the economic heavyweight who could shield the country from Donald Trump's tariff storm. Instead, within months of taking office, his government has plunged Canada into deeper red ink. The parliamentary budget officer called the fiscal outlook stupefying, shocking, unsustainable. Numbers tell the story. The deficit for the last fiscal year was $51.7 billion. This year, it is projected at $68.5 billion, a jump of 33%. Even worse, just months ago, the official forecast put it at $42 billion. That is a staggering increase of more than 60%. For ordinary Canadians, the takeaway is simple. The man who was supposed to rescue the economy is driving it toward the cliff. Carney has tried to blame Trump's tariffs for Canada's fiscal mess, but the reality is devastating. Only 18% of the problem is linked to Washington's trade pressure. The rest, more than 4/5, is self-inflicted overspending. Canada's net debt-to-GDP ratio has already blown past 40%. Economists warn this is the same trajectory that nearly bankrupted the country in the 1990s, when debt reached 70% of GDP and forced brutal austerity. Carney promised discipline. He claimed he would slash operating cost growth from 9% a year down to less than 2%, freeing room for investment. But whether he calls it operating spending or infrastructure investment, the reality is the same. It is all debt. Worse still, his message is muddled. One day he talks about austerity. The next he flirts with buying equity stakes in steel and aluminum companies. Investors and businesses see confusion, not clarity. The supposed master of finance looks exposed, and his credibility is collapsing. Markets are losing patience, rating agencies are raising alarms, and global investors are quietly shifting capital away from Canada's fragile economy. Even the provinces are losing patience. Alberta's Premier Danielle Smith has announced her own pipeline planning process, refusing to wait for Ottawa's endless delays. When Carney unveiled his list of national projects, no oil pipeline was included. That omission signaled weakness, and provinces are now charting their own course. Business leaders are equally blunt. The National Business Council has warned that without a clear plan to reduce deficits and debt, investment will dry up. The OECD has gone further, projecting that Canada could suffer the weakest economic growth in the G7 all the way to 2060 if nothing changes. For workers, the consequences are already visible: fewer jobs, shrinking services, and higher costs. From healthcare cutbacks to rising grocery bills, Carney's inability to deliver confidence is punishing households across the country. The contrast is impossible to ignore. Trump wields tariffs to pull investment and jobs back to the United States. Carney, in response, spends heavily, sends mixed messages, and presides over exploding deficits. Canada is left weakened, exposed, and dangerously dependent. The memory of the 1990s looms large, when The Economist branded Canada a third-world basket case. Today, that warning is returning. If Carney cannot restore discipline, if he cannot inspire confidence, the country risks reliving that humiliation. Canadians were promised strength, stability, and leadership. Instead, they are left footing the bill for a government that backfires at every turn. Carney's gamble has failed, and the price is being paid in lost jobs, lost investment, and lost trust. And every passing month without action only deepens the hole, making recovery harder, slower, and more painful for Canadian families. Carney promised strength. He promised leverage against Donald Trump. Instead, what Canadians see is a prime minister exposed and outmatched. Trump has pushed tariffs across steel, aluminum, autos, and even farm exports. And while Mexico found a way to adapt, Canada has stumbled. Conservative leader Pierre Poilievre summed it up bluntly.
Mr. Carney has unfortunately negotiated out of a position of weakness.
That weakness has real consequences: lost jobs, higher prices, and a shrinking economy. Carney's central pledge was clear. He would deliver dollar-for-dollar tariffs to show toughness against Trump. Instead, he retreated.
What you never do is threaten something and then withdraw the threat without getting anything in return. And he's back down on dollar-for-dollar tariffs, on the the digital services tax, on military spending, on all sorts of other things that he promised to Canadians and threatened to President Trump.
Yet that is exactly what happened. Mexico, by comparison, avoided counter tariffs, stabilized relations, and grew its exports to the U.S. by 2.4%. Canada, under Carney, saw exports collapse by 18% in the same period. Mexican unemployment is a third of Canada's, while our jobless rate sits at a punishing 7.1%. Carney's hesitation has emboldened both Trump and Beijing. Canadian farmers and fishers now face steeper barriers on both fronts. The trade war didn't weaken Trump, it weakened Canada. Bold reality. Carney once boasted he would have a deal with Trump by July 21st. That date came and went with no breakthrough. Instead, the Prime Minister has made one concession after another, on tariffs, on the digital services tax, even on military spending. Each retreat sends the same signal: weakness. And as Poilievre put it, the president smells weakness. At home, the damage is even clearer. Carney doubled the deficit in just 6 months, unleashing what Poilievre called printed cash, causing inflation in every other area of life. Food prices are surging at rates 70% above the Bank of Canada's target. Visits to Toronto food banks have exploded, 4 million this year alone. Meanwhile, 86,000 Canadians have lost their jobs since Carney took office. The so-called liberal jobs crisis is forcing families to choose between rent and groceries while their government spends recklessly. Ottawa has boosted spending on consultants by 37%, costing $1,400 per family. Bureaucracy costs have soared, foreign aid has increased, and corporate welfare continues to thrive.
So, why would the trade dispute have required he increase spending on consultants by 37%?
The answer? It didn't. These were choices Carney made, and Canadians are paying the price. Even worse, Carney promised restraint. He promised less bureaucracy, more efficiency, and balanced books. Instead, deficits are ballooning faster than under Trudeau. Canadian business leaders have said flat out that
Mark Carney's regulations and red tape are actually more damaging to the economy, even more damaging than Donald Trump's policies.
for workers, that means layoffs. For families, it means higher bills. And for investors, it means Canada is no longer competitive. The exodus of capital, $50 billion in 6 months, the worst in our history, is proof of that failure. Carney's supporters highlight Bill C-5 as proof that Ottawa is cutting red tape, but the reality is far different. Major projects remain stalled, 38 at the federal level, and capital continues to flee south. Even Canadian energy giant Enbridge has shifted billions into U.S. pipelines, creating jobs for American workers instead of Canadian ones. Business leaders warn that Ottawa's regulatory burden has become more damaging than Trump's tariffs. While officials insist Canada is resilient, the numbers tell a harsher truth. Growth has flatlined, unemployment is climbing, and the dollar keeps weakening. Mexico, by adapting quickly, has surged ahead, leaving Canada further behind. Carney once promised the fastest growing economy in the G7, but today Canada faces the opposite trajectory, an economy shrinking at record speed. Unless there is a decisive course correction, these failures will push the country deeper into decline. The collapse is not ending, it is only beginning.
Mark Carney says we are in the worst economic crisis of our time.
The economy is deteriorating fast. Unemployment is going up quickly, and that's not going to stop. There's a lot of things we don't know. We don't even know if in 6 months the US will still want to renegotiate CUSMA.
The shock is no longer hidden. Canada's economy is stumbling badly, and the weakness can no longer be disguised. Growth is slowing, job numbers are sliding, and the federal budget has been pushed back to November 4th. What was sold as a strategic delay now looks like panic. While Trump keeps tariffs firmly in place, Ottawa is caught in a spiral of shrinking options. The message is clear. Washington holds the leverage, and Canada is stuck waiting for instructions. Carney's speeches about resilience ring hollow when households see groceries costing more and jobs evaporating. The reality on the ground is a sharp contrast to the photo ops abroad. Instead of stability, Canada faces a moment of reckoning where the weight of U.S. tariffs collides with a fragile economy at home.
And Canada's been a very difficult country to deal with over the years, and we have all the cards. Economically, we have such power over Canada.
The core of the crisis is trade. Trump's reciprocal tariffs have squeezed Canada's export engine. Factories are idling, unemployment is rising, and forecasts warn the deficit could top $100 billion. Ottawa's response has been cosmetic cuts, promising a 15% trim stretched over 3 years. But 2/3 of spending is exempt, leaving only token savings against a fiscal hole that grows larger by the month. Trump, meanwhile, uses tariffs not as a punishment, but as a weapon of negotiation. Canada and Mexico are reminded daily that the United States can dictate the terms. Each meeting in Washington becomes a reminder of who truly sets the agenda. Carney's insistence that Canada is protected under existing agreements has aged poorly. When the U.S. signals that renegotiation is on the horizon, Canada has little to offer but concessions. The policy has backfired, and Trump's position only grows stronger.
Economic weakness is one problem, but political instability compounds the damage. Chrystia Freeland's resignation from cabinet removes one of the few recognizable figures in Carney's economic team. Other ministers are shuffled into diplomatic postings, leaving gaps at the heart of government. Instead of projecting confidence, the reshuffle exposes a fragile coalition. Canadians can sense when a government is running to keep up rather than leading. Carney's whirlwind trip to Mexico was billed as proof of international engagement. In reality, it underscored how little control Ottawa has over events. Busy looking busy has become the national joke. While Washington dictates tariffs and sets negotiation terms, Ottawa clings to symbolic trade missions that change nothing for families watching bills pile up. Each announcement of a cabinet change or a foreign visit feeds the perception of drift. For Trump, it means even less resistance when he presses his demands.
Everything now converges on the November budget. This is the moment where promises meet arithmetic, where speeches collide with numbers that no longer add up. If Carney delivers a budget that looks timid or evasive, the political cost will be immediate. Opposition parties are already wary of supporting a document that may reveal a triple-digit deficit. The fear of sticker shock is real, and the government risks losing credibility not just in Parliament, but with ordinary Canadians who sense the backfire firsthand. Trump's strategy is far simpler. By keeping tariffs in place and forcing Canada to negotiate from weakness, he ensures Washington never loses leverage. The budget in Ottawa will not change that equation. Unless Carney finds a way to reverse the slide, Canada will enter the winter weaker, more divided, and more dependent on U.S. goodwill than ever before. The conclusion is unavoidable. What was meant to be a show of Canadian strength has turned into a policy collapse. The backfire is here, and it is hitting Canadian families hardest.
So far, we're really just starting to see the beginning of the impact of the global trade war.
Canada's unemployment rate rose to 6.9% in April, with the manufacturing sector alone shedding 31,000 jobs.
Well, we have worse news than expected for many economists today. 66,000 fewer jobs in the month of August.
The alarm bells are ringing across Canada. In August alone, Statistics Canada reported the country lost 66,000 jobs, pushing unemployment to 7.1%, the highest in years. these are not just numbers. They represent families in crisis, mortgages at risk, and savings evaporating. The losses hit hardest among workers aged 25 to 54, the very backbone of the workforce. For months, Prime Minister Mark Carney insisted his government had a plan to shield Canadians from Donald Trump's tariff storm. He promised stability, he promised protection. Instead, jobs are vanishing at a pace no one expected. Carney's assurances now look hollow, and his economic strategy stands exposed as little more than political theater. Behind the photo ops and staged speeches, Canadian workers see only pink slips and growing unemployment lines. Then came the hammer blow. Washington doubled tariffs on Canadian steel and aluminum to 50%, effective immediately. Entire industries were thrown into chaos overnight. Canada's leaders responded with slogans about unity and strength, yet offered no effective counter. The reality is brutal. 23,000 steel jobs and 9,500 aluminum jobs are directly on the line, with ripple effects threatening 160,000 livelihoods. Communities from Sault Ste. Marie to Windsor brace for layoffs, while Ottawa clings to the language of resilience. Carney talks of a Team Canada approach, but the factories tell another story: stalled projects, shuttered production lines, and rising anxiety. Business leaders warn that counter tariffs could backfire. Unions plead for urgent support. Yet the government dithers, unable to deliver a coherent response. Trump pressed forward with decisive action, and Carney could only scramble in his shadow. For workers on the ground, the contrast is undeniable. One leader dictates the terms, the other delivers excuses. The pain does not stop there. Economists now warn that Canada could lose as many as 120,000 jobs by year's end as the global trade war deepens. Manufacturing has already shed 31,000 positions in April alone, and recession risks are climbing with each new report. Unlike after COVID, there will be no quick rebound. Growth is set for 3 consecutive quarters of contraction. While the United Kingdom managed to sign the first trade deal of Trump's second term, however fragile, Canada remains sidelined. Carney points to CUSMA as proof of stability, but that treaty is little comfort when Canadian families are staring down unemployment lines and dwindling paychecks. His speeches about a unified national economy ring hollow against the reality of closing factories and swelling food bank lines. Canadians wanted leadership. They got delay and deflection. And every new announcement from Ottawa sounds more like damage control than a plan, more like denial than real direction.
The verdict is clear. Mark Carney's policies have failed. He promised to shield Canadians from Trump's tariffs, but the country has instead walked straight into a storm of lost jobs and shrinking opportunity. Every month brings fresh evidence that Canada is losing ground, while Trump sets the terms of the trade war. Ordinary families pay the price through higher bills, uncertain futures, and communities hollowed out by layoffs. The so-called Team Canada response has been nothing more than a smokescreen for inaction. The longer Carney hesitates, the more painful the fallout will be. And unless Ottawa finds real answers soon, Canadians must prepare for an even harsher truth. The worst may still lie ahead. Canada is not only losing jobs, but also losing confidence, a far deeper wound that no short-term subsidy can heal.